This is a reference presentation from Metaplanet, which sets out a strategic investment of 2,100 BTC plus $2.5 million into Super League Enterprise, a company already listed on Nasdaq under the ticker SLE. Under the proposal, Super League would be consolidated as a subsidiary of Metaplanet Incorporated and renamed Superplanet Incorporated, trading under a new Nasdaq ticker, SUPA. The transaction was announced on August 18, 2026. It is expected to close in the fourth quarter of 2026. On closing, Metaplanet would hold 95.7% of the common stock. This is not financial advice. The transaction. This section covers the deal at a glance, what Metaplanet is buying, and the ownership and alignment that results. This slide makes clear what kind of transaction this is and what it is not. It is the same Nasdaq-listed company, renamed at closing. It is not a new listing, not a full acquisition, not a reverse merger, and not a SPAC. Super League Enterprise Incorporated would become Superplanet Incorporated, Nasdaq ticker SUPA. Only the name and the symbol change. On listing, unchanged. The same listed entity keeps its Nasdaq listing and its reporting history. The Treasury, 2,100 BTC plus $2.5 million contributed at closing, with the 2,100 BTC representing 100% of the company's day one Bitcoin treasury. On ownership, 95.7% of the common held by Metaplanet Holdings, locked for 5 years and designating 5 of 9 directors. A note records that the name and ticker change are subject to Super League stockholder approval and Nasdaq procedures. The symbol SUPA has been reserved with the Nasdaq, and Super League's existing operating business continues within the company. Metaplanet contributes 2,100 BTC plus $2.5 million to Nasdaq-listed Super League Enterprise, and structurally, this is a private placement of newly issued securities in an existing Nasdaq-listed operating company at $3 per share, with every Metaplanet share locked for 5 years. The chart compares scale. On the left, Metaplanet with a group treasury after closing of 43,000 BTC. On the right, Superplanet holding 2,100 BTC, which is 100% of its own treasury at closing, and consolidates into the group's reported 43,000 BTC. Drawn to scale, Superplanet's 2,100 BTC is 4.9% of the group treasury by area. The group treasury of 43,000 BTC is approximately $2.70 billion of Bitcoin net asset value. Metaplanet's US subsidiary, Metaplanet Holdings, subscribes for 95.7% of the common shares and accepts a 5-year lockup on every share it holds. The grid shows common stock outstanding at closing, where 1 square equals 1%. 95.7% is held by Metaplanet Holdings Incorporated, and 4.3% is existing holders. 3 points are drawn out. Economic, 95.7% of the common held by Metaplanet Holdings. Voting, 95.7% of voting power, because the common carries all general voting power, while the Strategic Alliance preferred stock votes only as a separate class on defined matters. And commitment, a 5-year contractual lockup on every share held by Metaplanet Holdings, with the associated warrants running for 10 years, twice the lockup period, so the position can only increase. Part 2. The opportunity. This section covers why the company is doing this, the US income market, the evidence from comparable issuers, Superplanet as an issuer, and accretion. The rationale runs in 3 steps: access, opportunity, and result. Access to US capital markets. These are capital markets Metaplanet cannot reach from Tokyo, and a US listed vehicle is the entry point. The credit opportunity. Preferred securities issued by Bitcoin Treasury companies have reached meaningful scale in the United States. Superplanet enters that market as a new issuer with an established sponsor's balance sheet behind it. Result: increasing shareholder value for Metaplanet shareholders. Superplanet intends to explore accretive capital raising transactions to increase BTC yield, which is the rate of change of BTC per fully diluted share for Superplanet shareholders, and, on a look-through basis, the Bitcoin attributable to each Metaplanet share. The slide closes with the thesis in one line. Metaplanet built one of the world's largest Bitcoin treasuries from Japan. Superplanet builds the same in the United States, funded by American income capital and consolidated into one group Bitcoin position. I think there is great potential for financial engineering with the US subsidiary. Due to the backing of the Metaplanet group, Superplanet could be supercharged with amplification, creating a volatility beast. Digital credit is the name many investors use to describe perpetual preferred stock issued by companies with predominantly Bitcoin balance sheets. The model today consists of various issuers using the capital raised to fund Bitcoin acquisitions, capturing Bitcoin's upside without common stock dilution, while paying dividends to investors supported by Bitcoin holdings, currency reserves, and operating cash flows. The diagram shows Superplanet enabling end-to-end execution, from capital raising through to Bitcoin acquisition. On the left, income capital, US and global investors focused on yield. That capital is contributed to the digital credit layer in the middle, where Superplanet issues US dollar-denominated perpetual preferred shares. The proceeds buy Bitcoin, and the reserve grows. Below, Superplanet's balance sheet is shown in three segments: operating cash flow, US dollar reserves, and BTC holdings, with corporate value growing as Bitcoin appreciates. Operating cash flow and dollar reserves are reserved to fund dividends, which are paid, when declared, from payment capacity. The note is important. Dividends of any issuer are subject to its financial condition, the terms of issuance, and board decisions. Nothing here guarantees payment. Segment proportions are illustrative, and balance sheet value moves with the price of Bitcoin and can decline when it falls. This slide sizes the opportunity by comparison. The global debt market is $353 trillion. US corporate bonds are $11.7 trillion. US money market funds are $7.93 trillion. Decentralized finance lending, measured by total value locked, is $41.3 billion, and Bitcoin-backed preferred stock, the category Superplanet would enter, is $16.0 billion. That is approximately 0.005% of the global fixed income market. 12 months of track record amidst a Bitcoin bear market has proven product market fit and capital structure robustness. The instrument is US dollar denominated preferred stock, with an initial public offering contemplated. The issuer is Superplanet Incorporated, Nasdaq ticker SUPA, perpetual preferred, with dividends paid in US dollars by a Nasdaq-listed issuer. Why this market? It is the deepest pool of income-oriented capital in the world. US investors buy yield in dollars, price it against a disclosed record, and allocate in size. What supports the credit? Segregated dollar reserves and Bitcoin at the issuer, plus operating income from the business. And Superplanet consolidates into a group with its own balance sheet, its own earnings, and its own access to capital. Where it stands today: authorized capacity only. Any issuance is a separate decision of the Superplanet board, sized against asset coverage and market conditions. So the path runs from authorized capacity, which exists, to issuance, where the board decision is still pending. The note repeats the point: authorized capacity does not imply an offering. No preferred issuance has been decided, and nothing here is an offer to sell or a solicitation of an offer to buy any security. This slide presents the growth of STRC, one of the reference instruments in the category. At its initial public offering on the 29th of July 2025, STRC notional outstanding was $2.8 billion. By the 18th of August 2026, it was $10.1 billion. That is 3.61 times in 12 months. Notional here is measured at a stated amount of $100 per share and differs from offering proceeds and from market value. Two current dividend rates are highlighted. Strategy Incorporated's STRC pays 12.0% annualized with semi-monthly dividends and monthly resets. Strive Incorporated's SATA pays 13.0% annualized with dividends every business day and monthly resets. The rest of the category is shown in a table. STRF 10.0%, $1.28 billion outstanding, quarterly and cumulative, the most senior. STRK 8.00%, $1.40 billion, quarterly, convertible, cumulative. STRD 10.0%, $1.40 billion, quarterly, non-cumulative. And STRE 10.0%, $0.90 billion, quarterly, cumulative, and euro-denominated. Fixed and floating, cumulative and non-cumulative, convertible and not, multiple structures coexist within one category. All are exchange listed with visible pricing and a secondary market. This slide compares the preferreds against Bitcoin itself over the same periods. STRC returned positive 18.6% against negative 46.5% for Bitcoin, measured from the 25th of July 2025. On an index of 100 at first trade, STRC finishes at 119 and Bitcoin at 53. SATA returned positive 37.5% against negative 38.7% for Bitcoin, measured from the 6th of November 2025. On the same index basis, SATA finishes at 138 and Bitcoin at 61. In both panels, the orange line is the preferred dividend adjusted and the gray line is Bitcoin on an identical scale. This slide is a scenario analysis for illustrative purposes only. It assumes a hypothetical preferred issuance equivalent to 100% of Superplanet's Bitcoin net asset value, with the proceeds deployed into Bitcoin. The point it makes is that the same senior obligation has two distinct readings. Standalone, Superplanet is a small issuer with large amounts of effective leverage. On a consolidated basis, it sits inside a group with conservative coverage ratios and deep balance sheet liquidity. Standalone, Bitcoin holdings of 4,200 BTC, Bitcoin net asset value of $264 million, debt and preferred of $132 million. That is an amplification ratio of 50.0% and asset coverage of 2.0 times. Consolidated, Bitcoin holdings of 45,100 BTC, Bitcoin net asset value of $2.84 billion, debt and preferred of $745 million, amplification ratio of 26.3%, and asset coverage of 3.8 times. The notes matter here. The assumption that perpetual preferred shares equivalent to 100% of Bitcoin net asset value are issued and that all proceeds are used to acquire Bitcoin does not represent the company's policy, nor has any such issuance been approved. The amplification ratio is the company's proprietary definition, dividing aggregate debt and preferred shares by Bitcoin net asset value. Consolidation reflects an accounting relationship only and does not mean the company's assets are available to satisfy the claims of Superplanet's creditors. Using the same illustrative scenario as the previous slide, Superplanet issues perpetual preferred at 100% of its Bitcoin net asset value and deploys the proceeds into Bitcoin without either company issuing new common shares. The measure is Bitcoin attributable to Metaplanet through Superplanet, at 95.7%. At closing, that is 2010 BTC. After a preferred issuance at 100% of Bitcoin net asset value, it is 4021 BTC. Metaplanet shares outstanding, the denominator, are unchanged before and after. So total attributable exposure moves from 42,910 BTC to 44,921 BTC. That is an attributable BTC yield of positive 4.69%. Bitcoin attributable per fully diluted Metaplanet common share, with no new shares issued. Part 3. The Group and the Path Ahead. This section covers the two listed platforms, distribution, governance, and the conditions and timing for closing. The group raises capital in two markets and reports one Bitcoin position. Upon prospective closing, the group will be able to raise equity and fixed income in both markets in two distinct currencies. On the left, the Japanese capital market in yen, feeding Metaplanet Japan, Tokyo Stock Exchange code 3350, the listed parent. Metaplanet deploys group operating cash flow and handles consolidated Bitcoin metrics reporting. Its instruments are common stock, warrants, convertible securities, bit bonds, and perpetual preferred. On the right, the US capital market in dollars, feeding Superplanet, United States, Nasdaq, a listed consolidated subsidiary, owned 95.7%, with its own Bitcoin per share metrics from closing. Its instruments are common stock and, prospectively, perpetual preferred, with an initial public offering contemplated. The conclusion is one consolidated group Bitcoin position, 43,000 BTC at closing, with both platforms driving growth at the group. This is the ownership chart after closing. At the top sits Metaplanet Incorporated. It owns 100% of Metaplanet Securities, a licensed Japanese broker-dealer, and 100% of Metaplanet Holdings Incorporated, its wholly owned US subsidiary. Metaplanet Holdings in turn owns 100% of Metaplanet Treasury Corporation and 100% of Metaplanet Asset Management. The chart then numbers 4 steps. Step 1, at closing, 2,100 BTC in kind plus 2.5 million US dollars flows from Metaplanet down through Metaplanet Holdings into Superplanet, giving Metaplanet Holdings 95.7% of Superplanet. Step 2, prospectively, US income investors subscribe for US dollar perpetual preferred, with an initial public offering contemplated. Step 3, Superplanet acquires more Bitcoin, so Bitcoin per Superplanet share rises. Step 4, Superplanet consolidates at 95.7% back up into the group. The result, shown at the top of the chart, is Bitcoin per share growth at Metaplanet, with accretive financing such as preferreds driving that growth. Solid lines are ownership and steps at closing. Dashed lines are prospective. This slide is marked for illustrative purposes only and refers readers to the official proxy statement filed with the SEC. The ownership chain is Metaplanet Incorporated, the Tokyo-listed parent under code 3350, owning 100% of Metaplanet Holdings Incorporated, a Florida entity and the US subscriber, which owns 95.7% of Superplanet Incorporated, the controlled Nasdaq-listed company holding 2,100 BTC. 4 capabilities are set out. First, raise capital in US dollars, equity and fixed income in the US capital markets, including common stock, preferred stock, and equity-linked securities. Second, deploy. Bolster the balance sheet through Bitcoin accumulation, US dollar reserve building, and high-yield fixed income opportunities. Third, seed funds. Build a track record, then distribute in Japan, with Superplanet as limited partner, Metaplanet Asset Management as general partner, and then Metaplanet Securities distributing into Japan. Fourth, strategic acquisitions in the US Bitcoin adjacent sector. Acquisitions, roll-ups, mergers, or other strategic transactions using the US public capital markets. Metaplanet's own optionality is summarized at the bottom. 381 million warrants in 4 tranches struck between $3 and $33.50, running 10 years at Metaplanet's election, plus a subscription right for up to $210 million of junior liquidity support preferred stock. The Superplanet board has 9 seats. Metaplanet designates 5 of them. 3 are named: Gerovich, Taufik, and Whitehouse III. 2 are still to be determined. The remaining 4 are continuing incumbent directors. Simon Gerovich is CEO and chair of Metaplanet Inc. and the architect of the Bitcoin Treasury strategy Super League intends to adopt. He co-founded and chaired Red Planet Hotels from 2010 to 2022 and began his career at Goldman Sachs Tokyo in equity derivatives. He holds an AB in applied mathematics from Harvard. Frederick Taufik spent 22 years at Goldman Sachs as a partner and was president of Goldman Sachs Singapore, with senior leadership roles across Hong Kong, Tokyo, and Singapore. He was formerly an operating partner at SoftBank Investment Advisors and is a director of Metaplanet Inc. He holds a BA from UC Irvine and an MBA from Georgetown. John H. Whitehouse III is a portfolio manager at GEM Investments in London, running credit and fixed income strategies. He spent 15 years in capital markets at Morgan Stanley and served as a U.S. Navy officer from 1999 to 2003. He holds a BA in government from Harvard. At least 3 of the 9 directors will be independent and audit committee qualified. The governance instrument is the Strategic Alliance Preferred. It gives board control, designating the board majority and the chair, and 3 class vetoes over charter and bylaw amendments, over merger, consolidation, or change of control, and over liquidation, winding up, or dissolution. These shares carry class voting and director designation, nomination, and election rights, with no liquidation value, and they convert into just 100 shares of common. This is governance, not economics. On management continuity, Matt Edelman continues as Chief Executive Officer, and Clayton Haynes continues as Chief Financial Officer and Secretary. The advertising and media activation business continues as a distinct operating segment. The timeline runs in 5 steps. August 18th, 2026, signing and announcement. The definitive agreement is executed with Metaplanet board approval, TD-Net disclosure in Japan, and a Form 8K in the United States. August 2026, the proxy statement. Superplanet files its proxy statement for the annual general meeting. October 2026, the stockholder vote. Approval is sought at the annual general meeting, including for the share issuance and the charter amendments. Pre-closing Nasdaq review. Nasdaq filings and review for listing the new shares. And the 4th quarter of 2026, expected closing. The name changes to Superplanet Incorporated. The Nasdaq ticker changes to SUPA. Consolidation takes effect, and the Bitcoin is contributed in kind. The slide carries a clear caveat. There can be no assurance that these conditions will be satisfied, or as to the timing of the closing. Part 4. The structure. This section covers the instruments, the priority of claims, and the warrant schedule. This slide lists the instruments. In summary, Bitcoin capital to bootstrap the strategy, additional participation rights to maintain ownership, governance, and an optional support facility. The initial contribution is common stock at $3 per share. 44,859,400 shares are acquired through the in-kind contribution of 2,100 BTC plus $2.5 million in cash, subscribed at an issue price of $3 per share. This forms the initial Bitcoin capital base, and it is taken up by Metaplanet. Capacity comes from common stock warrants over 381 million shares. These have a 10-year term in 4 tranches struck at $3, $10, $21, and $33.50 and are exercisable in US dollars, stablecoins, or Bitcoin. They preserve capacity for a future increase in Metaplanet's ownership. They are rights, not obligations. Governance is the Strategic Alliance preferred stock, and it is non-economic, perpetual, with no liquidation value and no dividend obligation, carrying class voting and director designation and nomination rights, and convertible into just 100 shares of common. It is a governance instrument, not an economic one. Support is the Junior Liquidity Support preferred stock, up to a maximum of $210 million. This is an optional subscription, paying SOFR plus 4.00% on a $100 stated value, with cumulative quarterly cash dividends, perpetual, over a 24-month window, non-zoting and non-convertible. It is Metaplanet's option to reinforce the balance sheet, and it is senior only to the common. Market liquidity comes from a separate 10 million share warrant package for EVO Fund, a 2-year term in 2 tranches of 5 million shares at $3 and $5.55, payable in cash. This facilitates liquidity of Superplanet shares in the public market alongside initial capital raising. 2 footnotes. On charter amendments, authorized shares are expanded to 1.0 billion common and 100 million preferred, and a blank check authorization lets the board set the terms, rights, and priority of senior, junior support, exchange, and future preferred, subject to stockholder approval. And on senior preferred, it is not issued at closing. That is authorized capacity only, and any issuance is a separate decision of the Superplanet board. These amendments are expected to be implemented prior to closing, subject to stockholder approval at Superplanet's annual general meeting. First, authorized capital 1.0 billion and 100 million. Common stock authorized up to 1.0 billion shares and preferred shares authorized up to 100 million shares. This is capital formation. It creates the share headroom for the closing issuance, the warrant tranches, and future accretive capital raising. Second, governance, class rights. The creation of Strategic Alliance preferred stock, convertible preferred shares designed to secure the company's governance rights through class voting rights and director designation, nomination and election rights. For Metaplanet, this is the governance instrument, giving board majority and class vetoes, with no liquidation value, convertible into 100 shares of common. Third, authorization, blank check. The board is authorized to determine issuance terms, rights, preferences, and priority, including for senior variable rate perpetual preferred, junior liquidity support preferred, exchange preferred shares for restructuring existing securities, and future preferred ranking pari passu with or junior to the foregoing. For the Superplanet board, this is authorized capacity only. Any issuance of preferred stock to investors is a separate decision of the board. The order of claims is deliberate. At closing, nothing ranks ahead of the common stock, and every instrument Metaplanet holds ranks behind what Superplanet may issue to others. Rank 1 is senior preferred, authorized but non-issued. This is the senior variable rate perpetual preferred, authorized capacity for future issuance to third-party investors, not issued at closing and shown for illustrative purposes only. It would be the most senior. Rank 2 is the junior liquidity support preferred, optional and undrawn at closing. This is Metaplanet's optional subscription of up to $210 million at 3-month term SOFR plus 400 basis points, cumulative and non-convertible. Its $100 stated value plus accrued dividends stand ahead of the common. Rank 3 is the common plus governance preferred, approximately $134.6 million of Bitcoin and cash. These are the only securities outstanding, and they are the residual claim. The Strategic Alliance preferred formally ranks senior to the junior liquidity support preferred, but carries no liquidation value, so economically it stands with the common. Only the outstanding layer is drawn to amount. The dashed outlines are authorized or optional capacity, not obligations. The closing slide summarizes the thesis. 2 markets, 2 currencies, 2 issuers, one consolidated Bitcoin strategy. Purpose-built to compound Bitcoin per share. Group Treasury, 43,000 BTC. Ownership, 95.7% of the common. Listings, Tokyo Stock Exchange code 3350 and Nasdaq ticker SUPA. Lockup, 5 years on every share. Secure the future with Bitcoin. More information is at metaplanet.jp and on X at Metaplanet. Overall, I'm very optimistic about the entry into the US market via Superplanet. This creates more optionality for Metaplanet, and I think there is a potential to create a highly amplified investment vehicle for investors. Thank you all for your time, and I hope you found this read-through of the presentation helpful. Cheers!